Hey everybody, it's Tom Gentile. Welcome to Tom's Trading Room. It is December 4th, 2015, where we don't just spoon feed you info, but we want to teach you how to think and trade like a rules-based trader. And it all starts right here at tomsoptiontools.com. So, we're going to talk about the four corners of the market right now, the crazy week we had, and where the big dogs are. All right, so that's my plan for this short video. Right now, you're looking at the SPY, that is the S&P 500, and what you're seeing here is you see a chart. This is a candlestick chart. I like candlesticks because I'm able to see the charts and read them much faster than open, high, low, close charts. The red line you see is implied option volatility for the next 7 to 30 days. So what is the short-term trader thinking? That's why I like to use that line over chart graph. So we had a big day today. We had a crazy week. I mean, the week started out with not much going on, but then we saw Tuesday get more of a bigger range, Wednesday even bigger range, Thursday huge range, Friday incredible range back up to the upside as we flushed a lot of short sellers right back out of the market. Volatility got extremely low on the upside as well, making options on the SPY fairly cheap. All right, couple other things I want to note out to you here as we're looking at this is that I see the percent change is actually starting to drop. Volume has been increasing over this week from around less than 100 million shares to 180 million shares trading hands today on the SPY. All right, MACD have been rising since the beginning of November. RSI is pretty much kicking in the middle between the buy zone and the sell zone, and as I said earlier, percent change is really kind of leveled off this week. Now, I'm not going to show you every one of those charts on the next symbols, but I want you to remember that within the tools package that you see here, you can get to all this data just by scrolling down. So check this out. TLT. The biggest piece of the week. Now, I got to tell you, I was on a webinar earlier this week, and we were talking about TLT just having a disconnect from the rest of the markets, and I thought it needed to come off those highs, and boy, did it. All right, I mean, we saw this huge dump of bonds going from around 123. Within a day later, we were trading down here around 119. That was a huge, absolutely huge move. We had a little bit of recovery there, but still, this tells us that interest rates are going higher when you see this number go lower. All right, but also what went lower with it too was implied volatility. This is one of those charts where vol runs with the price. As price goes up, vol goes up. As price goes down, vol goes down. All right, next thing I want to show you, and a big one, the currency markets. So we'll turn to FXE, which is the Eurodollars. Eurodollars had a big push. Goldman Sachs really took it on the chin this week when they were saying the euro was going down to subpar 100, and only 24 hours later, they got smacked in the face as the euro went up and traded above 107. A three-handle move in one day. I got to say, guys, I have not seen a three-handle move up in one day in as long as I can remember. I mean, it's been years since this has happened in the euro. Now, it gave some back, so maybe we'll see if this is going to continue. But this Japanese candlestick, Haromi, needs to Haromi down more before I can get any kind of confidence that we're going to be back into the downtrend, which really looks like it's going to it should resume after this incredible move to the upside, but only time will tell. Two more charts I want to show you. Crude oil. All right, so we're going to look at USO. And USO, I've been saying this for quite some time. Get ready for sub 40 a barrel crude oil, all right? And as you see here, USO dipped down to new lows, new all-time lows, I might add, for this ETF. If you are bearish on oil, this is the ETF you want to trade because it even gets more bearish between the contango spread, which is all the oil that these managers here have to continually buy the short-term oil, and they're overpaying for it. Plus, their overpaid salaries get taken out for fees in an ETF like this. So I don't like these ETFs to buy and hold for the long term. I would not buy and hold something like this for longer than 20 days. That's why I like to short-term trade USO. But on the sell side, wow, it doesn't get any better than this. All right. Last one. I wasn't even going to mention this one, but it caught my eye. And it caught my eye because GLD came up on the screen just before we started talking. And I was like, what is going on with the price of gold? Gold had a better than 2 1/3% move today. All right, from close to close. As you can see here on the chart, we went from the lows a couple days ago. We were getting below 101, and we spiked up to 104 2 days later. This is what happens when the unknown becomes known. And what was that? The big three-punch labor report that we generated today from the U.S. markets. All right, so going from there, where are the big dogs at? Well, the big dogs I talk about are stocks that are trading over $100 a share that are also exhibiting some huge range trades from the day. So I like to see stocks that trade 1% high to low ranges on a regular basis, and these are top stocks, and I rank them by what they did in the last 7 days. And as you can see, Netflix continues to carry the market. All right, there was a trader out that said earlier in the week that Netflix is responsible for 70% of the moves in the marketplace. I cannot disagree, as this stock has just been fantastic. Also, Baidu is telling us that China is becoming strong once again, and that any moves in China, I look to Baidu to try to get a confirmation that is it truly, are we truly going down, or are we rebounding, etc. Then you've got United Health Group, which has been talking about exiting Obamacare. I think that has a lot to do with the reason why it has shown up on this screen, which I haven't seen it in quite some time. All right, but these are the positive changes. On the bottom side, we've got Disney and we got Torozo, which just kind of fell out of bed this week and never really fully recovered, even with the jobs reports that we had and the labor statistics reports that we had today. All right, guys. Hey, for all of the information for the tools, to access the tools, to access the darknet channels, the money calendar software, and for my weekly newsletter on how all this stuff works, then you want to click on the blue button that came accompanied with this email at the bottom of this email, or you can visit www.tomsoptiontools.com. I'm Tom. I'll talk to you next week.